In this video, I will reveal all the best price action candlestick patterns that are proven to work. And before I continue, if you have any suggestions for future videos, you can drop them in the comments below. I'm still a small channel, so I'll still have time to read and reply to all of the comments. So without further ado, let's get on with the video. So, the first pattern is called the engulfing pattern. This happens when the second candle's body completely covers the first one. So, how do we use this pattern? Like I said before, you cannot simply buy or sell just because a pattern appears. You need to combine it with other price action methods like support and resistance to act as a second confirmation. So, over to the left, we can see that prices went down to this point and reverses significantly, making this a key support level. Now, as prices went back to this level again, notice what's happening. The candles are slowly getting smaller and smaller, indicating momentum loss. And finally, a bullish engulfing pattern was formed because the second candle's body formed slightly above the first candle. So what this shows is that sellers tried to push the price downwards, even at one point broke the resistance line, but then the buyer starts coming in and started pushing the price back up, surpassing the first red candle. And if you want a stronger confirmation, you can wait for the next candle to form, which happens to be another green candle. So this is a good opportunity to take a buy position. Let's look at another example. So again, here you can see that prices went up to this resistance line, then rejected it multiple times before reversing downwards. Now, as prices go back to this level again, we can see a fake out happening, as prices push through the resistance level only to then come back down again. And then followed by a bearish engulfing pattern, as the red candle fully engulfs the previous green candle. So what this shows is that buyers failed to push the price upwards multiple times as sellers kept coming in at this area, pushing the price back downwards. So this is a good opportunity to take a sell position. Remember, the movement of the market can be easily predicted through the behavior of the candles. Now, the next pattern is called the rejection candle. This pattern forms when one of the shadow of a candle is significantly longer on one side, showing a strong rejection in price. Here's an example of that. So over here, you can see price dips to this level before reversing, making this a point of support. Now, as prices went back to this level again, we can see a huge price rejection in the form of a rejection candle. So what this shows is that at one point, the sellers pushed the price all the way down, breaking the support level. Then buyer starts coming in and pushes the price back inside the support level. And for further confirmation, the next candle after that is a big green candle, which further confirms the reversal. So this is a good opportunity to take a buy position. So let's look at the rejection candle in action again. So over to the left, prices went up to this level of resistance, then drops back down again. Now, as prices went back to this level of resistance again, you can see what's happening. The candle starts getting smaller and smaller, indicating a loss of momentum, plus a huge rejection candle, indicating a strong selling pressure within this area of resistance. So this is a good opportunity to take a sell position. Here's a pro tip when trading rejection candles. The longer the wick, the better, because a longer wick indicates a strong rejection in that area. So the next pattern is called the shrinking candles. So this happens when a candle is slowly getting smaller and smaller as it approaches a key support or resistance line, indicating a decrease in momentum. So let's look at an example of that. So again, here you can see prices went up to this level and down again. So we can draw a resistance line over here. Next, as prices are heading to this level again, you can see a candle a smaller candle, and an even smaller candle before finally a very small candle with a long wick appears, signaling an indecision in price. Now, you can already expect a reversal happening here. But, to further confirm our analysis, we are waiting for a huge candle to form as shown here. So this is a good opportunity to take a short position. I'm showing this example again on another chart. So again, over to the left, we can see that prices went down, then reverses back up again, making this a key support level. Now, as prices are heading to this level again, we can see a big candle, followed by a smaller candle, followed by an even smaller candle approaching near support, indicating a loss of momentum. And then a huge green candle appeared, signaling a strong buying pressure, which further confirms the reversal pattern. So this is a good opportunity to take a buy position. Remember, you can tell a lot on what's happening in the market just by looking at the behavior of the candles itself. So, I just revealed to you how you can enter a trade using price action. And now, I'm going to reveal the best technique to exit a trade so that you can get the maximum amount of profit as possible. So, let's start. The first thing we need to do is to identify our stop loss. So, to find our stop loss, we are using the ATR indicator. I've made a video about the ATR indicator before, so be sure to check that out. So first, let's say I'm taking a sell position here. So, how we determine our stop loss is by looking at the ATR value. So what you need to do is point your mouse right on the candle where you want to enter the trade and look at its ATR value. In this case, it's 59 pips. So that's where you want to put your stop loss, at 59 pips. Now, I'm going to show how you can place your best take profit target to get as much profit as possible. And so for this strategy, we are also using the concept of momentum loss. So here's an example of that. Let's say I took a short position here. And as you can see, the candles are getting smaller and smaller, which indicates a momentum loss. So this is the first sign that I'll be closing my position soon. Next, you can see that the candles went flat, then reverses upwards because a big green candle appeared. So based on the price action, I can see that the momentum has shifted to the upside. Therefore, I'll be closing my position here and taking my profits. Another way I like to close my trade is when the price doesn't show a clear trend anymore. Like in this example. So let's say I took a short position here. So at first, I can clearly see a downtrend here. But then the next candles after that are directionless candles. I'm having a hard time knowing where the market is heading. So when this happens, I'll usually close my position. To summarize, the key to trading price action is to analyze the behavior of the candles when it's approaching a major support or resistance line. So, I just revealed to you the best way on how you can trade the candlestick patterns. Now, all I ask for in return is for you to invest 3 seconds of your time into liking the video and subscribe to the channel. It literally takes only 2 clicks, but it means so much to me. And in return, I'll upload more high quality trading videos like this every single week. So thank you guys for watching, and I'll see you in the next video.